Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Where we are judging and chasing volatility both ways. Remember the days, Hans, when we had jump risk both ways? Well, we have got fabulous volatility both ways, and we're going to talk about it. Basically, Basent came in exactly at the 1 o'clock hour today, Treasury auction, which was fine, by the way, but very strategically started talking the bond rally. And it was really evident because I have him on notifications, so I could see that he was timing it perfectly with the 1 o'clock auction. Anyway, long story short, it was also timed with Trump coming out 15 minutes later and basically removing the reciprocal tariffs on all but China, making the 10% still in play, the rest on pause for 90 days. So this is always the risk, which is one of the reasons we've talked about, and I know every day in my trading room, even though we're chasing this up into resistance yesterday for that intraday reversal, which was gorgeous. And it was in fact the largest reversal intraday. I didn't know that, historically speaking, by about 0.2%. We had today the high that needed to get taken out, which is SPX 5264 is what I gave. And once we got and stayed above it, shorts just started to, basically cover the hedges, what have you, the chasing begun, because we had two macro triggers. One was talk, one was action. So I wanted to show something real quick with you because I thought it was kind of also part and parcel for the market drama that we have all the time. Literally, Trump is positioning people, loyalists as well, to take advantage of this, in my humble opinion. So right before the news, someone opens up very aggressive calls and they go up 21% in an hour. This is the zero DTE that everyone loves. And so the result was, not only do you have the Basent bond put in place, but you have the Trump equity put in place. So both of those announcements that it came out exactly after the bond market collapsed last night. And we can talk about that separately, but this is basically the short-term effort to try and save both equities and bonds alike. So this is your kind of after a market heat map, but I show this for clients in my live trading room, and you can see dollar got supported. That's kind of important. Gold as well. This is equities, straight up hockey stick, and then it continued. This is the Qs. This is SPY, obviously, because SPX doesn't, I don't have that after hours. But as soon as it got above that blue line, and actually before it got above that blue line, I had done a client post right at 1 o'clock because I saw the Basent talking points. He was sweet talking us. So it was really ironic that we got this follow through because of Trump, but it started with Basent, and also the 10-year yield stabilized. Remember, last night, this sucker was up to 4.5 and the 30-year was up to 5%. And it was the rate of change that breaks stuff. So in fact, this is why I'm kind of putting this together here, is because we had not a little bit of a broken bond market, but a lot of one. This was an update that I posted for clients going, okay, I see a VIX divergence. I actually sent it to you as well, Hans, for your thoughts before the 1 o'clock auction. And then, of course, that was it. But bigger picture, we have big issues underneath all of this volatility movement, higher big picture and lower today on macro triggers. Because last night, big kind of hairy problem is that we had a massive bear steepening rally, and the 10-year went from 3.9 US 10-year all the way up to 4.5 in under 4 days and a few hours. That's not normal. So this is when leverage unwind meets plumbing problems, meets sovereign bond shock. Anyway, there was a lot that was going on, and I felt compelled to stay up until 2 a.m. and post this for clients. I was not the only one. Clients came in this morning and said they traded it all night. So my adrenals are shot, and I'm really glad that we can come together now to kind of, I don't even know what, calm down. I have not yet had anything to drink. I will. But this is the mercurial markets, volatility both ways. You've got to be on alert for any macro trigger that can sweep it higher, sweep it lower, and it's a lot of bloody work. Would you agree, Hans? And last but not least, since I'm Samantha LaDuc, founder of LaDucTrading.com. I usually do that first. And this is Hans Albrecht. And we come to you across, Boston to Toronto and try and figure out the market's next move. So hit it, Hans. What do you see in option flow?
Yes, coming to you from the North Shore of Lake Ontario. I would say the 51st state, but now I don't know. I'm going to throw out my copy of The Art of the Deal because Trump may have had Powell almost on the ropes. Almost on
Yes,
the ropes. He almost
yes.
broke. Yeah, he almost broke something, which is what it was going to take. And then he threw us that curveball today. But good for you seeing that something was up. Well, we had Jamie Dimon this morning. That was sort of the first bit of positive. That's kind of, it was almost like a bit of a thawing of what had been going on lately, which was really kind of like getting hammered with a battering ram, right? Every day, just absolutely. We are not pausing. We are not even considering talking to people. We're not taking calls. It was very, very, the animosity was thick in the air. And so this was really something I still can't quite believe. I'm looking at that bar on my chart here, and that is phenomenal from 4,900 pretty much 54.80, whatever that is. That's pretty special. And when that news came out, we were about 525 on the SPY, and I said, you know what, I wouldn't get in the way of this because it just, things got so negative. We had a VVEX of 190, which is basically full on crash conditions. I mean, there were some things that were completely, there were some indicators. I mean, look, the VVEX got crushed. That's the volatility of volatility. So just to make VIX more fun, we have volatility of volatility measures, and that's still 140. So I think there's probably still a little bit of room there for the downside VIX of 33. So some things were kind of stubbornly hanging in there, which of course would probably relate to some of the brokenness that was starting to happen out there. And then near the end of the day, I told some folks, I said, look, I wouldn't get in the way of this because we had the biggest rebalance. Remember, we always talk about the gamma, the synthetic gamma, these things, derivatives are the dog now, not the tail anymore. And so they're pushing things around. And we had the biggest, what could have been the biggest, I'm not sure, the jury's out, biggest rebalance in the history of these ETFs, levered ETFs, inverse ETFs.
Oh, I didn't know that. I didn't catch that. Okay, that's
massive.
interesting to know.
On a move like that, there's a significant amount of stock that needs to be purchased. Of course, technology is kind of kind of driving the bus there on those as a whole. There are some other little things in there, some Bitcoin, a bit of Russell, things like that. But really, technology, semiconductors, massive tens of billions of dollars needing to be bought at the end of the day.
I have to show you a screen real quick just because you're talking about it and it's fascinating to me. Okay, so you were just talking about the leveraged ETFs that have to be rebalanced. So yes. I have down here this, this is my ETF scanner. So I have 100 ETFs and some of them are a little duplicate, but the point is I can see where the market is moving on a particular day and go with it. Clearly, you had this type of action going on. All of these double and triple ETFs, the ARCs, the MAG, whatever, all of them obviously leading, but everything was oversold. Everything was pricing in tariff and trade wars. This is the result, and not even individual stocks. This is how much the change was, and all of it was intraday. So yesterday it looked like the opposite. We gapped higher and then we sold off 5%, 5 point something in the SPY. Today it was, oh my goodness, look at all the ETF rebalancing. So yes, very smart. And your VVIX comment literally reached, and we haven't been here since the August convexity rally from the yen carry trade, reached and then came right back down. But look where it stopped. I have to point this out because if this was a stock, this 3-day is support. Even if it came down to the 8-day, which is that purple line, it wouldn't be so scary to kind of buy the dip. And we only came back down. We get back above 148, this thing could fly again. So the point is, it's still not reversed like all the way down, but it was really interesting timing because it did have this divergence that I sent to clients to say, hey, is this a little bullish divergence? This was before we went vertical, where VIX of NASDAQ was up 28%. VVIX was only up 9%, but all the other VIX short-term, the 9-day, the regular spot VIX, they were negative. So in the same way we do this kind of spot up, SPY green, VIX green is always kind of a precursor. In this particular case, we had VIX very red despite NASDAQ way, way, way offsides. So I think that was very interesting as it related to the timing of this bounce as well.
Join Samantha and Hans at the next macro to micro options power hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full options macro to micro power hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.